You just paid your electric bill, $214. You click Submit Payment, watch that little loading circle spin, and then boom, confirmation screen. Payment successful. And here's what's wild. You have absolutely no idea what just happened to your money. I'm serious. You think you do. You think, well, Peter, obviously it went to the electric company. But that's like saying your food goes to your stomach and thinking you've explained digestion. The actual journey your money takes in the seconds, minutes, and hours after you hit that payment button is nothing like what you're imagining. And understanding this, truly understanding this, is going to completely change how you think about bills, banking, and why you always feel broke even though you make decent money. I'm Peter, and I spend way too much time thinking about the invisible infrastructure of the financial system. If you're someone who feels like money just evaporates from your account without you ever really controlling where it goes, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Look, I'm going to walk you through exactly what happens to your money after you pay a bill. And I mean exactly. The databases that ping, the ledgers that update, the actual movement of funds through the banking system. And here's the thing. Once you see how this really works, you're going to understand why you're always scrambling to pay bills at the last minute, why your available balance never matches your actual balance, and most importantly, how to use this knowledge to keep way more money in your pocket. The illusion of instant payment. So let's start with what you think happens when you pay a bill. You probably imagine something like this. You hit Pay Now, and your money immediately zips through the internet like some kind of digital carrier pigeon, lands in the electric company's bank account, and that's that. Transaction complete. Your account goes down by $214, theirs goes up by $214, everybody's happy. Except that's not even close to what's happening. Here's what most people don't realize. When you pay a bill, your money doesn't actually go anywhere, at least not immediately. What really happens is way more interesting and honestly kind of insane when you think about it. The moment you click that payment button, you're not moving money. You're creating a series of promises, a chain of IOUs that ripple through the financial system. And this is where it gets really interesting, because understanding this chain of promises is the key to understanding why you feel broke. The first 60 seconds, the authorization. Within literally 1 second of you clicking Submit Payment, here's what happens. Your bank receives a message, not your money, a message. This message says, hey, Peter wants to send $114 to the electric company. Do we have permission to do this? And your bank looks at your account and makes a decision in milliseconds. They check two things. First, do you have $214 in your account? And second, this is the part nobody talks about, do you have $214 that isn't already promised to someone else? Because here's the thing. Your bank account balance that you see, that's not real. I'm serious. The number on your app right now is basically a suggestion. Your actual available balance is that number minus all the pending transactions, minus all the scheduled payments, minus all the checks you wrote that haven't cleared, minus all the debit card transactions that authorized but haven't posted. According to the Federal Reserve, the average American has a difference of about $150 between their displayed balance and their truly available balance at any given time. That's why you overdraft, even though you swear there was money in there. So within that first second, your bank puts a hold on $214 of your money. They don't move it. They don't send it anywhere. They basically just stick a Post-it note on it that says, reserved for electric company, do not touch. Your displayed balance might still show the full amount, or it might update to show the payment as pending. Depends on your bank. But either way, that $214 is now in financial purgatory the first 24 hours, the ACH Network. Now, you might be thinking, okay, Peter, but eventually my money does go to the electric company, right? Well, kind of. Let me explain. Most bill payments in America, we're talking about 93% according to NACA, the organization that runs this system, go through something called the ACH Network.
Oh.
ACH stands for Automated Clearinghouse, which is possibly the most boring name for one of the most important financial systems in the world. The ACH network is basically a giant batch processing system that was designed in the 1970s. And yes, we're still using 1970s technology to move money in 2025. It's like if we were still using rotary phones to make calls, except it's your actual money. Here's how it works. The ACH network doesn't process transactions in real time. Instead, it collects all the payment requests from all the banks in America and processes them in huge batches 3 times a day. That's it. 3 times, at specific times. So when you pay your electric bill at 2:47 p.m. on a Tuesday, your payment gets bundled with millions of other payments and sits in a queue until the next processing window. Could be a few hours, could be the next morning. During this time, your money is in what I call financial limbo. It's not in your account anymore. Well, it is, but you can't use it. And it's not in the electric company's account yet either. It's just floating, promised but not delivered. And this is where people get absolutely destroyed financially. The psychological trap, mental accounting. Look, here's what happens to most people. And be honest, this is probably you. You pay a bill, you see the transaction show up as pending, and in your mind, that money is gone. You've already mentally subtracted it from your available funds. You've done the responsible thing. You paid your bill. Gold star for you. But your bank might not actually move that money for 2 more days. So now you've got this weird situation where you think you have less money than you actually have access to, while at the same time, the bank is showing you a balance that's higher than what you can actually spend. This is what behavioral economists call mental accounting, and it's destroying your ability to manage money effectively. Dr. Richard Thaler won a Nobel Prize partially for his work on this concept, how we treat money differently based on arbitrary categories we create in our heads. Here's a real example. Let's say you have $1,000 in your checking account. You pay 5 bills totaling $600. You see those 5 pending transactions. In your mind, you now have $400, but your actual displayed balance still shows $950 because 3 of those transactions haven't fully processed yet. So what do? You spend based on what you think you have, $400, which is good, responsible, except then an unexpected expense comes up. Your car needs a $200 repair, and you think, I can't afford this. I only have $400. So you put it on a credit card and pay 24% interest. But here's the kicker. You actually had $950 available. You could have paid cash. You paid interest on money you already had because the payment system created this fog of confusion about what you actually have access to. According to a 2023 study by the Financial Health Network, 65% of Americans have paid overdraft fees or credit card interest specifically because they miscalculated their available balance due to pending transactions. That's costing the average person about $380 a year. $380 a year, just because you don't understand what pending actually means. Days 2 through 3, the settlement. Okay, so we're now about 48 hours after you clicked that payment button. Here's where things actually start moving. The ACH network has processed your payment request. Your bank has received confirmation that the electric company's bank is ready to accept the money. And now, finally, the actual transfer happens. Except, it's still not what you think. Your bank doesn't physically send $214 to the electric company's bank. That would be insane. Banks aren't mailing checks to each other or doing wire transfers for every single transaction. Instead, both banks have accounts at the Federal Reserve. Yeah, the actual Federal Reserve. Your bank has an account there, the electric company's bank has an account there, and the Fed basically just updates 2 numbers in their ledger. Your bank's Fed account minus $214, the electric company's Fed account plus $214. That's it. That's the actual movement of money. A number goes down in one database, a number goes up in another database. The total amount of money in the system hasn't changed. No cash moved, no physical anything moved, just numbers in computers. This is the thing that absolutely blows my mind. We've created this incredibly complex emotional relationship with money. Stress, anxiety, fear, pride, shame, and it's all ultimately just database entries. Your financial life is literally a number in a computer that goes up and down. The final step, the posting. Now we're at day 3, maybe day 4 if you paid on a Friday, because surprise, the ACH network doesn't process on weekends, because apparently money needs a break too. The electric company's bank account receives the funds, they credit the electric company's account, your account with them changes from outstanding balance $214 to outstanding balance $0. Meanwhile, your bank has officially removed the $214 from your account. The pending transaction becomes a posted transaction. The hold is released. Everything is finalized. Total time elapsed, 3 to 5 business days. For what felt like an instant transaction. Now here's why this matters. You might be thinking, okay, Peter, this is interesting trivia, but why should I care about the technical details of payment processing? Because understanding this system reveals 3 massive opportunities to keep more money in your pocket, and I'm going to walk you through each one. Opportunity number 1, the float. Remember how I said your money sits in limbo for 3 to 5 days? During that time, you know who's earning interest on it? Your bank. That $214 is still in your bank's possession for days before they actually have to send it to the electric company's bank. And during those days, they're lending it out, investing it, earning interest on it. For one person, one transaction, this is pennies, but multiply this across millions of transactions every day, and banks are earning millions of dollars per year on the float, money that's in transit. Now, you're not going to beat the banks at this game, but you can use the same principle. If you know your mortgage payment won't actually pull from your account for 4 days, you can keep that money in a high-yield savings account, earning 4 to 5% interest until the last possible moment. For a $2,000 mortgage payment, earning interest for an extra 4 days each month adds up to about $26 per year. Not life-changing, but that's a free dinner. And if you do this with all your major bills, mortgage, car payment, insurance, utilities, you're looking at $75 to $100 per year just for understanding the timing. Opportunity number 2, the grace period. Here's what most people don't realize. When you pay a bill, the company doesn't actually know you paid them for several days. They sent the bill, you clicked pay, but their system doesn't update until that payment fully settles. This means you have way more flexibility than you think. If your electric bill is due on the 15th, you can often pay on the 17th or even 18th and still avoid late fees because the payment will process and post within the grace period that most companies build into their systems. Now, I'm not saying to pay your bills late, but understanding this gives you breathing room. If you're between paychecks and you need to hold on to cash for an extra 2 days, knowing exactly how the payment timing works means you can make strategic decisions without getting hit with fees. Opportunity number 3, the reversal window. This is the big one, because that money doesn't actually move for days. You have a window where you can cancel or modify payments. Most people don't know this. They think once they hit submit, it's done. But if you paid a bill on Monday and you realize on Tuesday that you made a mistake, wrong amount, wrong account, whatever, you can often contact your bank and stop or reverse the ACH transaction before it fully settles. I've personally saved $1,200 doing this. Accidentally paid my rent twice in 1 month because I'd forgotten I'd already scheduled the payment. Caught it the next day, called my bank, they reversed it before it posted. Done. According to NACHA rules, you typically have until 5 p.m. Eastern, the business day before the settlement date, to cancel an ACH transaction. But you need to act fast, and you need to know this is even possible. Here's the thing that nobody wants to talk about. The complexity of the payment system isn't an accident. It's not just legacy technology that nobody's bothered to update. This complexity serves a purpose. It creates confusion, and confusion is profitable. When you don't know exactly how much money you have, you make mistakes. You overdraft, you pay credit card interest, you make decisions based on fear and scarcity instead of information and strategy. The average American pays $225 per year in overdraft fees. That's $225 per year just because the system is designed to be confusing about what money you actually have access to. Think about that. The financial system has created a situation where the number on your bank account screen isn't the real number. Pending transactions exist in a weird limbo state for days, and nobody, I mean literally nobody, sits you down and explains how any of this actually works. And then we wonder why people are bad with money. You're not bad with money. The system is designed to be confusing. And until you understand how it actually works, you're playing a game where you don't even know the rules. All right, look, I've given you a lot of information. Let me break down the actual action steps you can take starting today. Step 1. Download your bank's mobile app if you haven't already and learn the difference between your available balance and your current balance. Your current balance is the lie. Your available balance is closer to the truth. Make decisions based on available balance only. Step 2. Create a simple spreadsheet or use a notes app on your phone. Every time you pay a bill, write down the date you paid, the amount, and the expected settlement date, usually 3 to 5 business days later. This eliminates the mental accounting trap. Step 3. Create a separate bills checking account. Keep 1 month's worth of bills in there. Pay all bills from this account only. This creates a buffer and eliminates the confusion of mixing bill payments with daily spending. Step 4. Time your bill payments strategically. If you get paid on the 1st and 15th of the month, schedule your bill payments on the 3rd and 17th. This gives your paycheck time to settle before bills start pulling. Step 5. Keep a 3-day cushion in your checking account, meaning never let your balance drop below what you expect to be automatically debited in the next 3 days. This accounts for settlement timing and prevents overdrafts. Here's what I want you to understand. The financial system isn't magic. It's not this mysterious thing that only bankers and economists can comprehend. It's just technology and procedures and rules that someone created. And once you understand how it actually works, you stop being a victim of it and start using it to your advantage. Every single bill you pay is a multi-day journey through databases and networks and ledger entries, and during that journey there are opportunities to earn interest, to maintain flexibility, to avoid fees, to make better decisions, but only if you know what's actually happening. So the next time you pay a bill and watch that loading circle spin, you're not going to think my money is gone. You're going to think my money is entering a 3 to 5 day settlement process during which I still maintain certain controls and opportunities. And yeah, I know that's not as catchy, but it's true. And truth is how you win with money. If this video changed how you think about bills and payments, hit that subscribe button. Drop a comment and let me know what bill payment hack you're going to try first. And if you want to go deeper on this stuff, how the banking system really works, how to optimize your cash flow, how to think about money like the wealthy do, I've got plenty more videos breaking it down. My name is Peter. Stop letting your money disappear into a system you don't understand. I'll see you in the next one.